we have Don Dawson with us. Don does a lot of work on what's the name of the site again, Don? Big Charts. Don, how are you? Welcome back to Face.
There we go. Should be unmuted now.
You are Don.
Yeah, it's barchart.com.
Barchart.com. I know I've used those charts for decades. Not lately, but Don, welcome back and Happy New Year.
Happy
What's
New
top
Year.
of
It's good to be back.
yeah, what's top of mind going, almost through the first month of 2024.
Crazy, isn't it? The
What's
older we get, the faster it goes, doesn't
it's
it?
a blink of an eye. So, what are the stories and narratives that you're taking a look at?
Yeah, I was just listening to the comment on the employment situation, and I agree 100% on that. And another feature of that too, if you look back over like the last several employment reports in 2023, a lot of that growth was coming at government jobs, right? So you're
Government.
coming into an election year, why not? Let's fatten that up. Make one will make the economy look good, with employment going on. But all it really is just new government jobs adding to our deficit more, really, is what it amounts to. Most the government jobs, we got three people doing one person's job. So, it's just widening it out a little bit more. So anyway, yeah, employment, when this thing turns south, it's going quick, I believe. Same thing.
Yeah,
Um,
and I heard that's and if you see it and Blake sees it, the Fed sees it,
yeah,
and that's why someone I do respect. Fed Guy 12 is saying that the Fed's going to aggressively ease, that the market is not overestimating their dovishness for this year.
yeah, I'm in the other camp of that, obviously, but
Okay.
just, yeah,
That's what makes a market.
I
And
agree. Yeah.
uh, do you have some charts and things you want to show us today,
You
Don?
know, I would just, I had just written, excuse me, I've just written an article here with bar chart. And if I could just show, I'll do a
Yeah.
screen share here and I'll pull that up here and show
Okay.
that to everybody.
Great. Thank you.
And it was an article on strength in the dollar index, which is kind of counter trend to what everybody else is looking at. But then again, sometimes that's where the money is made.
Okay. Would love to
So
see an alternative view. So, you think this rally that we have is going to be more sustained?
I'm looking that way. Yes. Uh-huh.
Okay.
Let's see. You should
Because,
can
I was thinking 105, but you're looking higher.
Yeah, I try not to put targets, but I'm just looking for trend is what I try and find. So I'm just really looking for the trend to start up, and that's what I'm sort of interested in. Uh,
Okay.
let's see here. I should be
Great count. Definitely not the narrative
there. We
that
go.
people are talking about.
Okay. Can you see the screen now?
Yeah, I see your cursors on VIX and crude oil. Yes.
Okay, good. So this is the barchart.com website. And if anybody's interested in following some of the articles that I write, I put one out about once a week on different markets, a lot on commodities, every once in a while currencies and dollar and so on. Obviously, dollars have a huge impact on commodity prices. So to get to it, once you get to barchart.com, there's a tab right here called News. And then you left click on that. And over here in the left column where the featured authors are, you'll find my name down here, just Don Dawson. You can click right there. And I'll just take you to a tab here. It's got all of my historical articles. I keep them archived in here for us, which is pretty cool. And I try to write my articles not just on my opinion about the markets, but I used to teach in a school for about 15 years of commodity futures and so on. So I try and do an education of how I come about my ideas as well as my opinions in the market. So it's a sort of almost like a tutorial, each one of my articles, which you'll see when we check out this particular one here. My prior one was on, Canadian dollar with its fourth quarter weakness and tying that in with seasonal patterns and commitment of traders report and so on like that. That one seems to be working out fairly well. Anyway, if you wanted to follow some of my articles right up here in the upper right corner, just follow this author. They're all 100% free, and they'll just email you a link out every time I publish a new article. But the
Okay.
one I'm talking about for this week was U.S. dollar. Will the U.S. dollar surprise to the upside? And it's basically when I came into it, I started looking at some of the things here. For one, I think when the Fed gave that a pump and dump basically at their FOMC meeting in December, That was a complete 180-degree turn of where they were just in August, talking about inflation is not even close to where we want it to be. And we're
Right.
still 3.4, right? Not even near the 2% that they want. And everybody's looking at the peak of 9%, and we're down to 3.4. But, peaks are, they're meant to be broken, right? It's like resistance or support in the market. But I have a feeling that we're going to see another run in inflation coming up here. A lot of it has to do with what's going on in the Middle East right now, too. As you can see, with the Red Sea issues going on. I just saw a headline in there this morning talking about container fees for these ships are
Yeah.
gone through the roof again. The next you're going to be hearing about is the insurance companies are not going to let these ships go through the Red Sea.
That's already happening, isn't it?
Okay, good. You're already hearing. So, I mean, the same thing happened over when Ukraine and Russia first went into their issue. Those ships, insurance companies, were like, there's no way you're going to send those ships up there. So anyway, all that's going to do is just going to start causing like this chain reaction back to a disrupted supply chain issue, and I think that's what we've got facing us. And that what's going on in the Middle East is not looking like it's going to go away anytime soon. So that's why I'm kind of leaning on this. It's almost impossible for the Fed to do 6 interest rate cuts this year, 4 even. If they do one, it'll basically be just to appease the voting public, because that's unfortunately the Fed has become political, even if they say they're not. And it really doesn't matter which party it is. It seems like every party there's something goes on during an election year, and that's what I wrote about here in the article. Was basically just that idea that something happens during election years that makes the economy look a lot better than what it is. Again, fattening up the employment numbers, making them look really good, but yet not going into the details of why the number is the way it is. So
But maybe we're making making this run in the market too early. It's happening here,
I think
October,
you're right.
November,
Yeah, I
December, January, because what's going to be important is where it's trading or how it's trading
yeah,
late
yeah.
summer.
Yeah, the equity market is doing a shoot first and ask questions later. It's like they just jumped on the momentum and took off with it, and that was a pretty quick run. But if you go and you look at there's a ETF called RSP, which is basically S&P of an equally weighted index.
Yeah.
It hasn't even taken out last month's high, much less made a new high. So this truly isn't a broad market rally. It's that magnificent seven in the stock market, and that's pretty much what's dragging everything else along. It's like in commodities. Like, for example, if corn starts to rally or wheat starts to get a strong rally, the corn
Yeah.
soybean market or whatever will come and just do a sympathy rally, is what it is. It's
Right.
just kind of like, well, then, if wheat's going, corn and soybeans will go up, right? Even if the
How about
fundamentals aren't really
oats?
there. I'm
Maybe
sorry.
oats
And
will
oats,
pop.
even oats doesn't have enough volume in it to,
You
you
got
know,
to be an old timer to remember the oat market.
oh my
They
gosh.
say they say that's where everyone went at the Board of Trade as they were
Yes.
going broke. They could only
It,
trade
uh,
oats,
it was that
right?
or pork bellies, right? Or pork bellies made them go
That
broke, and
pork
then they went
bellies
to
made you
oats.
broke.
But the old saying when the
Oh,
floor used to be, as oats go, the grains go. So, but today there's
yeah.
just no volume in it. So anyway, I'm just in that camp, but I just think the equity market is just gotten drunk on the punch bowl that was given out when Powell gave his little speech in December, and this hangover coming up is not going to be good. I mean, when you look at when the Fed funds or the Fed Watch tool here, this is part of the CME group, and this thing was way up here in the 70s. I can't get the number down here. Yeah, it was like 75% not long ago, and it's way back down now to like 40 something percent. So that's getting rid of the March event coming up right here. So that one was really positive. But now, once we get through March, then May will start to dwindle down a little bit too, and people are starting to realize that we can't cut rates quite yet. So the Fed Watch tool is
Are
a
they
pretty
going to
good
hike this year, Don?
this year. I think they will once, my opinion. I think
Hike,
they'll,
hike.
yeah, hike. Yeah. Oh,
Oh,
hike. I'm sorry.
hike. One, two, three.
You know
Like
what? I would put that just as even of a chance as a cut. But the only reason I think we'd get a cut would be simply a political issue.
political.
Yeah, and just to make it so that somebody has something to stand up on a stand and sit there and go, look, we got lower rates. That means your credit card bill is going to go down, your
Yeah.
mortgage is going to go down, and it's going to take more than one cut to impact that to make any a real impact on your finances.
Won't
So,
a
but anyway,
stronger dollar kind of muffle the effect of inflation, where a weaker dollar would kind of increase the potential, at least in nominal terms?
Yeah, well, as I was mentioning earlier, commodities are priced in dollars. So if we do see a weaker dollar for some reason, that's only going to make, we got things going over in the Middle East, and then you get a weaker dollar to increase commodity prices. That's going to be a tailwind to higher prices. So yeah, I just don't see inflation going away. I think we'll get ready for the next upswing. And to tell you the truth, we might not get 9% again, but we're not going to be at 3 point something by the end of this year.
So the narrative for a stronger dollar is what? Risk off, higher yields.
Yeah, oh, definitely the higher yields. Yeah. That's going to be coming too. If you've been hearing about the Treasury this year, there's a bunch of maturities coming due for Treasury products and so on. They're going to have to be
Yeah.
reinvested. But to do that, the Treasury is going to have to issue a lot more debt this year than they did last year, which means at each auction, there's going to be more Treasury products available to be sold. And the only way to get more of that sold is to raise rates or to have higher rates to have people come buy it. So that's going to be some things to be keeping an eye on too. I've already seen like in the 10-year and the 30-year yields on the long end are already upticking. They're not being talked
A
about.
little bit.
Yeah, so we're starting to see some upticks in that. So anyway, the seasonal pattern, the seasonal analysis on this on the dollars, which really kind of got me interested in this as well. And this is more research. I like using
Oh yeah, I
seasonal.
remember them.
Yeah, I use the seasonal patterns more for a screener of a market that I'm interested in trading in. For example, when I see the
Yeah.
dollar or any market doing this kind of stuff of chopping and chopping like this, I just go, I'm not a day trader. I just do swing trades and commodity spreads, for example. But when I see a market that's, for the last 15 years, that's what the black line represents. When I see a market is doing that for an entire month and there's really not a lot of movement, I don't get too excited about it. But what I do like to see is after it's been basing like this, is you get these kind of moves here. If you'll notice February. So February's got a pretty strong upward bias to the dollar, for the last 30 years, 5 years,
Yeah.
and 15 years. So that's a pretty significant move coming up in February. And so we're getting pretty close to the end of January here. And now it's just going to be a matter, is that going to pan out for us again this year? The interesting correlation with that is with February having an uptrend in the dollar, this is the 10-year treasury down here, what their 15-year pattern is. And you come back, here's the January timeframe, for January, what the seasonal pattern is. And this is in yield, by the way, not
Okay.
price. So here, look at the yield, what it does basically from that February up until that April timeframe. We get a spike like that. Typically, this comes from down here. I'll put it right there. The U.S. government issues more debt to come into the April 15th tax deadline to help pay for tax refunds.
Yeah.
That's what that pattern comes from basically every year. Because obviously the Treasury does not have cash laying around. So the only way they can get cash to pay people back is to offer more debt. So that
I
dollar,
think that time of year is when we're going to finally have everything that we've kicked the can down on
yeah,
budgets around that time of year as well.
that's what I think is going to be recognized this year because of the extra debt that's going to have to be issued is going to be I think it's what's going to be the straw that broke the camel's back in this debt issue that we're dealing with. So we've been talking about this how many years? Debt, and I even got to the point where
Ross Perot.
yeah, I just got to the point where I was going like, you know what? Somehow we get over it. We'll just print more money and we'll be okay. And I've been saying that for so long. I'm just gotten to the point now. It's like, how much longer can we do this now? So, but anyway, I thought that was an
Yeah.
interesting pattern. We got, February, get the strong dollar, which
Yeah.
really correlates with higher interest rates. And if we get that coming in there, that's going to be an interesting period with the new debt coming on, a seasonal pattern like this, and a 10-year yield getting that pump up like that just for tax refunds. I think that's what's going to give us an issue. Another thing I like
And
to
we're
use.
only a week away from February.
Exactly. Oh, another thing to kind of keep in mind, these seasonal patterns, oops, I'm sorry, when these seasonal patterns come in, I never use them right to the day because to expect a seasonal pattern to have an apex like this, exactly on the day of the turn,
Yeah.
year after year, is impossible. So
Unrealistic.
what you do is you kind of create a 10-day window prior to that peak or that trough, and then a 10-day window post that. So I use about a 20-day
Okay.
window right there to get this whole move started right here. And then
Okay.
I always go back to price action. If I don't have an uptrend starting, if I'm trying to buy, well, for example, in the dollar, if I'm trying to buy this, I'm not going to buy anything unless it's in an uptrend. The daily is looking pretty good for a start to an uptrend, and the weekly
Yeah.
starting to favor some form of an uptrend coming in too. So we're getting two good sized time frames that are starting to tee up to the upside with a seasonal pattern to the upside. So that's kind of bullish in my opinion. But another tool I like to use with this is once I see these seasonal patterns in here, I believe like the commercial entities or like, especially in the commodities, when we're talking about the physicals, they
Yeah,
play a huge role in the markets. Well, anybody who knows the futures markets were created just for these commercial traders to hedge
right,
price risk. And if they got their finger on the pulse of that particular product, right? They know that every year when the demand is, when there's excessive supply and stuff like that. So when you follow their behavior in the markets, you can get a pretty good feel when they're starting to get aggressive at buying something or aggressively selling. You usually don't want to argue with that. On the other side of that is to manage money, which is typically your trend followers. So I'll keep an eye on them as well because they can move the market quite a bit with a lot of money they have. And if we get an uptrend on the managed money side with the dollar index, I'm gonna be like, okay, that's good to know. But here's one where the commercials, for example, down here, the Commitment of Traders report, and this is a weekly chart, by the way, of the US dollar index. Down here, what I pointed out was this is a 1 year look back. And that's what I kind of like to use as a gauge. Because if you think about, if you look back an entire year, that kind of puts anything that happens throughout a year seasonally, whether it's, tax refunds or year-end repatriation in September 30th for the government, stuff like that. It's all baked into a whole year. It's not just 3 months or 6 months, but I'm looking at the whole year. So what we're seeing here is this red line. There's a zero line right here. And if you'll notice, this says negative, but this is the commercial interest in the futures market of this dollar index. But it's a negative number. What that means is they're holding more shorts than they are long. So they're basically net short, the commercial entities are. However, this horizontal line right here is the zero line, meaning if it goes above that, they're going to hold more longs than shorts. But
and
what
they haven't been long the dollar all the way for a
they,
year.
exactly. However, at points, they don't go net long. But if you look,
They're
like this
not as
point right,
short, and that's enough.
yeah, what you're looking at here is they're the
Yeah,
least short they've been than at any
yeah,
time in the last 52 weeks, which is the same thing as saying they're the most bullish they've been in the last 52 weeks. Does that make sense? Without
yeah,
having to go net long. So that's what I'm looking for. And that's where I think people get kind of confused with it. Just because that's a negative number doesn't mean they're really bearish on the market. They were really bearish down here. Over here,
right,
they're more bullish than they're bearish. And this is the
right.
commercial entities. This could be banks, because this is where swap dealers are built in, along with commercials in the financial market. So this could be even central banks or anybody who's got some longer term views on the U.S. dollar. But the interesting thing is, if you look at this peak that we've had, we've already put the bottom in back in here where we were peaking here. But notice they're not going away. They're still adding week after week. They're still adding a few more, getting rid of more shorts and going more
Yeah,
to the bullish side. But look back here, the last time we were at this level, meaning they held the same number of contracts, this was
right.
almost an 8% run on the dollar when they were
Yeah,
bullish back here. And now we're back up to that same level of being bullish. And the interesting thing is, if you put a trend line from here to here, it's an upslope, meaning we got a higher low over here. So this is
okay,
a pretty
that's
positive
true.
picture right here for the commercials. They're buying at a higher level than they did back in July of 23. So that's, to me, it's
Does
got.
your gut tell you we're going to take out the highs? At 107.20? Would
Yeah,
that be a
that's the
target
thing.
for you, or
Yeah,
or what?
I don't use target stale because I believe in trends, so I use trail stops. So
Okay, got it.
I remember on the floor how the guys used to trade up there, and I didn't trade on the floor, but I visited a lot and got to know a lot of the guys up on the floor. But it was so funny. It's just kind of like anytime a market gets near these kind of highs or something, there was always, and I heard you mentioning stop runners here a few minutes ago, but it's like you can almost see the guys on the pit and they'd be going like, I smell
Yeah.
stops,
Well, they had
know?
it in their hands.
Exactly. And they would
The
run
deck.
those. Yeah.
Yeah,
And the
what?
old saying of support and resistance is made to be broken. It's so true in these markets. Because if you look at every move, there's only one real top and there's one real bottom. Everything else was a false top and bottom in the entire move. So it's just,
A lot of
I
head
think,
fakes in this business.
I think
Mr.
that just,
Market's very mean.
oh my gosh. It's almost,
Mean
like
guy.
being married. So, but
Don, what a great presentation. Really nice, man.
well, I just want to talk with it. It's a little bit different than most people are looking at, but if it,
you're like a trading, I don't know, like an attorney. You build your case with evidence.
I
I know
try
you
to
don't want to
do it.
be,
Yeah.
a trading prosecutor. I mean, you come in with all this evidence and, some pretty good macro stuff to build your case for what you're looking for.
We I look
And
at That's
I
how I
like
put my
that.
money. Yeah, that's how I want to put my money on the line. I want to have some, you and I both know we could have all these facts and I can still lose money on this trade, right?
Yeah.
But I
Yeah.
want the odds as much in my favor as I can get them. And I'm not looking for perfection, but I just want to put as much in my favor as possible. And for one, once I see, okay, seasonal pattern, if something's done something for 15 years, it's kind of like if you go up and shake hands with somebody 15 times in a row and 14 times they smack you upside the head after they shake your hand, what do you think they're going to do the 15th time? More than likely going to smack you upside the head again. It's human nature. And when stuff is repeated so much like this, that's when I really think that seasonal analysis comes into play. And now I've seen seasonal patterns fail so bad. I mean, because something fundamentally went totally different this
Yeah.
year than at any time in the past 15. But that's another trading signal too, that when you see a seasonal pattern not working and failing, that's a pretty strong move the other way because there's a lot of people trapped on the wrong side. And when something's broken that bad, markets usually go very volatile in that direction.
Yeah, you get false breakouts with technicals too,
uh-huh.
and
Yeah.
and
Oh, yeah.
going, you'll have a resistance level, will take it out intraday and close much lower.
Totally agree. But anyway,
Yeah,
I do like just to have some interesting, points for me for confidence to stay with the trade. So I don't want to run the first time it wants to go against me. And I found that these have been pretty reliable tools for me. I like seasonal analysis. I like correlations of seasonal analysis. And really, if I can get a confirmation on the COT, commitment of traders report, this really helps me stay with the trade.
do
Because
you have
to me,
any view on miners, on the gold miners, Don? Because they're back. A lot of them are back to COVID lows,
mhm.
compared to what the physical market is doing.
I'll be honest, Dale, I don't track the miners. I hear people
Oh,
talking about,
that's
I
fine.
hear people talking about the miners, and not doing well at all. And people are
Yeah,
saying, without the miners, gold can't go higher. It's kind of like the old Dow theory, right? Without
yeah.
transports confirming a new high, it can't go higher. But I don't, I just don't necessarily follow them. I don't do too much
Okay,
in equities to start with, other than index funds.
okay. All right. I just thought I'd throw it out there. Well, I thank you for what you brought to the table today.
Well, thank you for having me. I
I
enjoyed, I
yeah,
enjoyed talking about it.
I always look forward to you coming in and bringing some great old school stuff. I mean, I haven't heard of more research for a while, and I encourage people to follow Don. He's a pro. The things he writes about, he puts skin in the game, and so he knows what you're going through when you're trying to look for
Oh,
opportunities. I think he should be part of your intelligence gathering.
well, thank
And
you
you
very
know
much.
what?
Yeah.
And it's free. That's,
Yeah.
I knew a guy, he was a KJ, and his expression was, if it's free, it's me. That's the kind of world we live in. Don, I was thinking that eventually, I don't know how much further we could go where everything's free. Maybe we're going to have to pay people to read our stuff and listen to our stuff. What do you think? Huh?
Dale,
Will
the
you
way this
please
world,
listen to me?
this Dale, the way this world is turning right now, I would not be surprised if that happened.
Yeah, see, someone like that. How much do you want? How much are you wanting, Mar, for me to talk for another 5 minutes? I'll pay you 20 bucks. Anyway, Don, it's great hanging out with you today, buddy.
All right, Dale. Thank you very much for
Yeah, I'm
having
going
me.
to be following this stuff, and I hope 2024 is one of your best years
I appreciate that. You
on
as
the
well.
planet.
Yep. You,
Thank you,
all of you
Don.
traders as well. Hope everybody does very well this
I'll
year.
be in touch and we'll get back together in the spring.
Sounds great. You have a great one, guys.
All right, Don Dawson, everyone. Follow him on barchart.com and read his articles. And it's really a great site, too. They have
Hey,
nice
hey, Don,
charts.
I just want to say thank you for joining us today. It's really, really nice to have you here.
Well, thank you very much. I enjoyed coming in.
You got to get him on Trader Summit.
Don, that's not a bad idea. I'll get your information from Dale, and I'd love to have you on Trader Summit sometime.
Okay. All right. Sounds great.
Cheers,
All right,
sir.
guys.
All right.
So, everyone, you could join the team in 18 minutes on the morning edge. And hope we've prepped you for the day. If not, tough. Anyway, good luck. And remember, don't just count your pips, count your blessings. I'm just a little bipolar. Thank you
Thanks,
for
Dale.
understanding me. All right, Blake, take it easy.
You too.
See everyone tomorrow.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.